Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart of the ES, and what we saw yesterday was the the lows of the prior day get taken out. We did not get back up to the upper band. So the ride, this second ride, you've had a 3-day ride, 3-day break, 5-day ride, is either taking a break or we're going to go ahead and, pull back a little bit. And when I say pull back a little bit, I don't think this market really owes you much more than a test of the middle band. And to expect much more might not be very realistic. We'll know when we get to middle band, and middle band today is 1911.25. Will it be 1911.25 when we get there? Absolutely not. It'll probably be closer to 1920. That moving average will continue to move up rapidly as it sheds these congestion prices. What I'm looking for today is, can the bears, now that they have broken through yesterday's low in the Globex, our current low is 40 even. Can 43 to 46 now become resistance? And we make a lower low and we break below 37, which is a big number for me, and then 30, which is really for me a close below 30. Not a trade below 30, but a close below 30 puts me in the quote-unquote correction camp. Okay? And then it becomes an issue of how deep is the correction going to be. I'm going to say middle band until the bears surprise me and actually put something together below middle band. Because, and maybe if it's below middle band, then I'm really going to get very skeptical as we approach the red line there, the 50-day exponential moving average, which is held 1, 2, 3, 4, 5 times since the middle of April. So, but we're a long way away from that discussion. Step 1 has already been achieved. We've got lower lows on a Globex basis for our second consecutive day. What the bears need to do is to turn a stair step up into a stair step down. The way that happens is these dip buyers are going to come in this morning. They will come in. It's 9 o'clock right now. They'll be here in about an hour, and they're going to buy it. And the issue is lower high and turn them away. They'll buy it again, turn them away, and eventually they'll step aside and look for better value lower. Or is it dip buyers come in and the bears fold up their tents and we find ourselves back in the 54s? If that happens, then I really think you're looking at significantly more upside in the market, up to areas, from 1970 to 1985. Because you've gone ahead and you've flushed out the weak hands a little bit, and you've got more fuel now to squeeze it higher. So it's a big day for the bears, and it's a day where the bulls can really put it away if they can rip the morning dip back up and make new highs. So we'll see who wins the day. But for now, control your size, control your risk, and just look for those moves. And expect the dip to be bought, but become skeptical if that dip gets sold and turns into a lower low. Okay, follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I will be back tomorrow morning with another webcast. Trade them well, everybody.